When looking to qualify for a mortgage or really any type of loan, the credit score is one of the factors that will have the biggest impact on determining which loan programs you might qualify for, which interest rates you might be looking at, and much more. In today's episode, I have a conversation with Rosa Mumm, who is a credit specialist at Xactus. We have a conversation talking through the 5 factors that determine your credit score, the current credit score model, as well as the changes that are coming to what determines your credit score later on in 2025. Whether you are just getting started and have no credit history, or if you're looking to just gain some insightful tips on how to get yourself into a better financial position, this episode is for you. And if I haven't met you yet, my name is Connor Webb. I'm a mortgage broker, mortgage advisor here in the Pacific Northwest. It's my job to help assist my clients in determining which financing option is going to be best for their needs. So whether you're looking to get into your first property, buy an investment property, maybe a second home, or refinance any of the above, make sure to reach out to myself. My contact information will be in the description of this video if you'd like to reach out and get in touch. And with that, let's get into the podcast. All right, Rosa, thank you for joining me on the podcast today to talk all things credit scores. So let's get into the factors that determine your credit score. What are the big factors that people should be aware of in order to better increase their credit score?
I think people are probably most familiar with, especially your audience, Connor, are probably most familiar with that pie chart that's put out there by FICO. To summarize that just real succinctly, it's the amount of debt or how much debt you're using, like your revolving utilization. Your payment history is your biggest consideration, and that makes sense, right? How long have you paid on time? How many accounts are you paying on time? And then you have length of credit history, new credit or inquiries. Like when you apply for credit, you get an inquiry, and then you have credit mix, like how many revolving accounts you have, how many installment accounts you have. And those are like the 5 big factors that go into credit scores.
If someone has no credit, they're starting from scratch, what would your advice be to help them start building credit?
Get a secured credit card. A secured credit card is a credit card. Your audience is probably familiar with this, right? They say, I want a $300 secured credit card. They put the $300 up front, and then they use credit against that $300. So they're not really, on the hook, so to speak. A lender's not on the hook with the secured card. It's secured with cash, but it impacts your credit score rating the same as any other revolving account does. So if I don't have an adequate credit score, I don't have a credit score because I have no credit. The best way to get that started is to get a secured card and establish some credit history with that account.
And then a common misconception that has come up a bit, especially with first-time home buyers, is that your rental history affects your credit. Can you speak to that?
Sure. So I think that the big underlying issue here, the misconception is that people only have a credit score, or they have a credit score on each bureau, and that's just not true. So the mortgage industry standard credit scores today are old. They
Mhm.
range from Experian is from 1999, TransUnion is from 2004, and Equifax is from 2005. And those mortgage industry standards, the FICO standards used in mortgage industry, do not consider rental accounts. So they are not factored into the credit score that's used in mortgage at all.
Mhm. And then building off of that, you mentioned that the scoring model is a bit old.
A
I've
bit,
heard that
yeah.
there's changes that are coming to the credit scoring model. Can you speak to what is happening, when that will happen?
Absolutely, absolutely. So right now, the mortgage industry standard is FICO version 2 on Experian, version 4 on TransUnion, and version 5 on Equifax. And in 2025, FHFA is saying we're requiring two scoring models, and we're requiring FICO version 10T, right, which is much more current than version 2, 4, or 5 of FICO, and also Vantage Score 4.0. So there'll be 2 new scoring models in use, but that's not expected until the fourth quarter of 2025.
Okay. And so I hear the name of the models. Do you know what is changing as far as are these 5 factors gonna be weighted differently? Are they gonna be completely changed?
Well, they'll be weighted about the same for the FICO model. Though that hasn't changed significantly. Vantage 4.0 does weight those factors differently. Like you may see, for example, payment history not being 35%, maybe it's now 42%. But
Mhm.
the biggest advantage of Vantage 4.0 is that it scores a much larger portion of the consumer population. So you don't need today for a FICO score and tomorrow for a FICO 10T score, you need at least 6 months of an account that's at least 6 months old, an account that's reported during the past 6 months. Those requirements aren't there in Vantage 4.0. So a much larger portion of the population will be scoreable with Vantage 4.0.
Interesting. Yeah, I'm curious to see how that changes things and if it would help potentially more people be able to get qualified with
Yeah,
the new
absolutely.
model.
I think we're going to see a lot of people what our industry refers to as thin profiles, right? They don't have enough history to be scored. They're now going to be scoreable with Vantage 4.0. So we should see a lot more eligibility in the mortgage arena when those scoring models are adopted.
Do you know if the standard scoring ranges are gonna be changing? Like anything above 780, 800 is the absolute max right now. Below 580 is gonna be the poorest. Is that gonna be kind of the same range or the number is gonna be totally different?
That's a great question. The range of the scoring models themselves are the same, meaning they're going to run 300 to 850 on both platforms. But where the loan level pricing overlays, like where those guidelines are, that'll be a wait and see situation because we're not quite sure how they're going to factor in two scores on every report. And so, how they're going to average those scores and then how those pricing cutoffs will be applied. That's a wait and see. I wish I had that information for you.
Yeah, so I guess to clarify, what you're describing is that so Experian, Equifax, TransUnion, they each have a score. Now there's gonna be 2 scores per account?
You got it.
Interesting.
One borrower has three scores, right? When you pull a credit report for a mortgage, you pull what's called a tri-bureau credit report, a
Mhm,
tri-merge credit report. It contains Experian, Equifax, and TransUnion, and you typically go off of a mid score.
mhm.
Right? So
Yep,
not your highest, not your lowest, but the middle score. And that's what's used to qualify you for a mortgage.
right.
And you only have one set of scores. But in that world, in 2025, fourth quarter of 2025, you're going to have a FICO 10T score and a Vantage 4.0 score for each of those bureaus. So you're going to have six scores. And they're talking about using an average on each of those scores and then weighting those averages. So how they look at those averages across bureaus is still TBD.
Interesting. Yeah, so it might be the blended average mid score, that we use for mortgages. That's interesting.
Yeah, it'll be interesting to see how that pans out.
And then talking into, about Xactus a bit on what you guys do for consumers and then also getting into rapid rescores. If someone's
Oh,
in the process and looking to boost their credit score in a short amount of time, what does that
yep.
process look like?
Oh, that's a great question. So, I actually head up the score optimization team at Xactus. So, Xactus is a leading verifications provider. So, if you're a consumer out there and you're applying for a mortgage, there's probably about a 1 out of 4 chance that your loan originator is going to use our services, whether that be to obtain the credit report, maybe verify income and employment, other verifications, tax transcripts, the full gamma of things that I can't even speak to. So my niche is really score optimization at Xactus.
Hmm.
And Rapid Rescore fits solely into that. And Rapid Rescore is a service that if you're a loan originator and you're working with a borrower and that borrower needs information reported quickly to the credit bureaus to impact their score. So as we all know, when we pull our own consumer credit report, we'll look at this and say, well, yeah, that was my balance on my account last statement in September,
Right.
right? It only gets reported at the statement balance date. Sometimes you need information updated quicker. Maybe that's because your debt to income has dramatically changed. Maybe I took a big vacation and I let a lot of debt ride in September and that's actually been paid off. A loan originator can use a rescoring service to say, look, I've got a statement here from Rosa's Discover account, and she doesn't owe anything on it. I want to
Mhm.
update that at the credit bureau level because then it will be considered by the score. And that's why it's called rescore, right? It's updated at the bureau level. A new score is pulled based on that updated information. And that can be carried out as quickly as 3 days. And rush services sometimes as short as a day.
Yeah, that's been a huge help in the past with people that are looking to get a little better pricing because they're close to that next range of credit score for pricing, or if they're just trying to qualify for a loan program, being able to pay off an account, submit proof to it, have your credit score boosted in 3 days compared to having to wait for another 30-day cycle. That's huge.
Absolutely.
Any other big tips that you would give to consumers on when they're looking to build a credit score, just credit score in general, and buying a home, refinancing, that type of thing?
Think the most common thing I tell my friends, because I think this is a common misconception and still exists, because I hear it from professionals in our industry, is that you need to build credit, you need to carry a balance on your credit card, and that just isn't true.
Mhm.
The credit score that's used in mortgage doesn't even know if you pay off your statement every month. It doesn't know if you're a transactor and you pay it in full every month, or if you're, making a minimum payment. The only thing that's getting reported to the credit bureaus every month for mortgage industry scores, right? Because we're not looking at trended data yet. It just looks at the statement balance. So main carrying a balance does not help your score. It does not improve your payment history. It doesn't do you anything other than probably get you some interest charges you don't need. So don't carry a balance just to build a credit score. The best advice to build a credit score, if you didn't have a need for credit, is to get one of those secured credit cards, put a tank of gas on it, pay it in full every month. Just
Yeah.
show that you're actively using credit, right? Actively using it. So you want a statement balance being reported, but you can pay it in full. You don't need to maintain a balance just to build credit history.
Yeah, some great tips. I do have another question, another common question that I get from people that are looking to get pre-approved. When we pull their credit, they're like, "Oh, my credit's not exactly what I thought it was." Can you talk to the difference of the calculations when someone's applying for a credit card or for a car loan compared to a mortgage?
Absolutely. So I think people in our industry especially deal with this every day. They go, but that's not my score in Credit Karma, right?
Yeah, right.
And Credit Karma uses Vantage Score, an older version of Vantage Score. That's not what's used in the mortgage industry. And people say, but I've got a FICO score. My Discover card gives me my FICO score every month, and that doesn't even match what is on my mortgage credit report. And that's true. Like FICO will say, if you go to myfico.com, you have access to 20 some different FICO scores alone. So they may have just applied for a car and just got a credit report yesterday, and that
Mhm.
score that they got on that credit report for their car is going to be different than the one that you get, Connor, if you're helping them with a mortgage. And that's because the version that's in use in mortgage is that older version of the FICO score. If you go to apply for a car, you're getting an auto score. And somebody would say, well, why would an auto score be different than a mortgage score, which would be
Right.
different than a bank card score? But really, all a credit score is a number that says how likely is this person to repay their debt? How likely is this person? Let's put a number on it. And if you take me, for example, and let's say, for example, I've always paid my installment accounts on time. I've always paid my car note. I've always paid my mortgage. But when it comes to credit cards, I may have let something slip here or there. My auto score is going to look more favorably than a general risk score because
Mhm.
it gives more weight to my installment history because that's more likely how I'm going to be, right? To make an installment payment
Gotcha.
is
Yeah.
based on how I've paid my installment loans in the past. So that score is weighted differently based on installment loans. So you have auto scores, you have mortgage scores, you have bank card scores. And if a consumer really wants to understand how is a mortgage going to look at me? What is my mortgage score going to look like? They have two ways they can do that. They can talk to a loan originator in the mortgage industry, right, and pull their credit report and get their mortgage score.
Mhm.
They can go to MyFICO and specifically look at their mortgage scores. And if on your MyFICO website, it'll give you the option for those versions that are used in mortgage to see how you score. But there's all sorts of different scores out there. So FICO, Vantage Score, those are the two biggest. But there's a lot of proprietary scores in use too. Like some lenders use their own scoring methodology. Maybe they give more weight to existing client base that have other accounts with them. Their score is going to look different there too. So
Right.
no credit scores are the same.
So if someone does want to kinda get a general ballpark of where their current score is, it's because they're looking to build their score over time, would they go to MyFICO? Is that where you would recommend that they go to do a soft pull so that they don't have to get a hard credit pull?
Yeah, absolutely. If you wanted to know where your mortgage score was,
Yep.
you could go to my FICO, and anytime a consumer pulls their own credit through a website like that, there is no inquiry. As you mentioned, that's a
Mhm.
soft pull. It's not a hard inquiry. It's not for the purpose of obtaining credit. So there is no ding that people worry about on their credit score. But if they're looking at doing things over time, there's nothing wrong with using a free site like Credit Karma. In most cases, good behavior helps the score, bad behavior hurts the score. So if you're looking to build it over time, if it was a friend or family of me, I would say don't go to a service that you have to pay for,
Mhm.
right? You can use a service like Credit Karma and watch your credit score go up. When you get to that point where you're ready to say, I want to know how the mortgage industry is going to look at me. Then you could use a service like my FICO and pay for that score to see how it's going to look without getting that ding for an inquiry.
Yeah, and I personally have used Credit Karma. You just download the app, you just have an account, and
It's great.
each month it'll update your accounts, and it'll show you those different 5 factors, and it'll show how weighted they are, and it'll give you recommendations on if you do this, then this might help. So it's a great
Yep.
tool just to kind of get the ball rolling. And then again, as you
Yep.
mentioned, once you're looking to get pre-approved, and like I mentioned to everybody, it's like if you're thinking about buying a home in the next year, just get pre-approved today so you know exactly where you're at. You have the hard inquiry, but that's the smallest impact on your credit score, and at least you know exactly where you are today so that you can accurately game plan down the road instead of just kind of guessing and hoping that you're where you need to be when you're actually looking to make a move.
Yeah, absolutely. And you mentioned the inquiry. In the inquiry, like FICO would say on average, it's about 5 points, but
Right.
they only look at inquiries during the past year. So once a year goes by, the impact of that inquiry is gone. And as
Right.
you know, shopping for a mortgage, if they were to apply with multiple folks within a short period of time, it only counts that as a single inquiry for credit. It
That's a
doesn't
30-day
account.
window, right?
Well, no, it's actually
No.
14 days on Experian and 45 on Equifax and TransUnion, but there
Oh,
is 30 days before it's even considered, and that may be the 30 days you're referring to. So it doesn't even look at the inquiry until it becomes 31 days old. Once it becomes 31 days old, then it says on Experian, if you've applied for another mortgage in the past 14 days, don't even count it. And on Equifax and TransUnion, it's 45 days.
interesting. Yeah,
Yeah.
that's a wide range, 15 to 45 days.
It is, but that's because that experience score is the one from 1999. If we go fast forward to next year, another one of the changes you talked about, when you get to FICO 10T, it is 45 days across all three bureaus.
Okay, interesting. I'll definitely have to have you on again once those changes happen so that we can get the full details of what
Lots of
exactly
good
that
stuff
looks like and
coming.
how that'll affect people.
Yep.
Yeah, really appreciate all the insight. This is awesome. This is a huge resource for people that are just looking to build their credit, get started, get the ball rolling. So again, appreciate you coming on, and we'll have you on again sometime soon.
Sounds great, Connor.